Welcome to the SNN Network Summer Virtual Event. We are pleased to introduce the next presenter for today's event, James Williams, VP of Corporate Development for Flora Growth. James, the floor is yours.
Wonderful. Thank you so much. Pleasure to be here, everyone. And I'm joined by Luis Merchant, CEO of Flora Growth. By quick background, my name is James Williams. I'm VP of Corporate Development in charge of largely the M&A strategy for Flora Growth. As a quick background to myself, I've spent the last 5 years in cannabis land, a banker before that, building companies such as WeedMD, as well as a consultancy firm called Cannabis Manufacturers Guild, largely in Canada. And have since moved over to assist the great team over at Flora on their M&A strategy, to which we'll discuss a good portion of today. I'm going to pass it over to Luis Merchant for his background, and then we can get started and walk through the presentation. Back to you, Luis.
My name is Luis Merchant. I'm the President and CEO of Flora Growth Corp. A brief background on my professional experience. I'm a dual citizen of both Colombia and the United States. Have spent the last 20 years in both retail and CPG, working for companies like Target and Macy's in various roles in management, operations, marketing, and sales. The latter which I was responsible for a couple of roles that I'd like to highlight for all of you. Responsible for the sales organization in beauty, generating over $3.5 billion in revenue and overseeing over 10,000 sales colleagues across the continental United States. And in the latter part of my career at Macy's, I was responsible for the human capital, allocation of human capital across all functions in the organization with a payroll expense line of over $2.5 billion in P&L. It's a pleasure to be here, and we're going to start talking about Flora Growth Corp. So on the slide, of course, first a brief background on Flora. We were founded just a short 3 years ago. The company is an early stage high growth company. Last year we completed a $30 million pre-IPO equity raise through a Reg A+ offering. That raise left us with over 10,500 investors, 85% of which are located in the United States. And that clearly signaled to us that the investor community in the U.S. was ready for a project from Colombia that was focused on cannabis and a portfolio of brands and products. So some of our investment highlights are on this slide. Of course, we are well positioned. We have launched 5 operating divisions, and we have a healthy balance sheet after 2 successful financings, the second one being our IPO on May 11th of 2021. We have a very robust M&A pipeline that include strategic targets that allow us to complement our revenue growth, our global distribution, and most importantly, our human capital needs. We have an exceptional leadership team that starts with our chairman of the board, Mr. Bernie Wilson, former vice chairman of PricewaterhouseCoopers, but all the way from the management team, including myself, as well as our advisors in Juan Manuel Galan, who's the author of the Cannabis Law, and someone that is helping us navigate the regulatory landscape, not only in Colombia, but worldwide. We have a globally renowned house of brands, over 7 brands, over 340 products, and 70 of them which have medical licenses and registrations with the regulatory agency in Colombia called INVIMA, which is equivalent to the FDA in the United States. A very strong capital markets positioning. We listed on NASDAQ under the ticker FLGC on May 11th of 2021. We're the first cannabis company that goes through a traditional IPO on NASDAQ without utilizing a reverse merger or a SPAC. And of course, our biggest highlight on this slide is our cultivation in one of the best geographies in the world that allow us to produce cannabis at a cost below 6 cents per gram of dry flower. So on the following slide, you will see our 3 strategic pillars from left to right. So starting from the left on the slide, our low-cost cultivation is a strategic foundation of our company. We have a diverse high THC and high CBD strains for global distribution. We have demonstrated production costs at one of the lowest cost structures in the world at 6 cents per gram of dry flower, and that is due in great part to our geography. We are located in Colombia. Our grow is located in Colombia. And on the outskirts of Bucaramanga, we're able to complete over 3 harvests per year, which is 1.5 to 3 times more than our peers. We have an exceptional land package with over 247 acres, which is about 100 hectares that are licensed for cultivation. And there are a number of environmental advantages that come from being located in this geographical point in the world. And of course, we have differentiated product. Not only our grow is of exceptional advantage in terms of cost, but also is grown organically and will be soon to be certified GACP. In the middle of the slide, you see our diverse product portfolio. Flora Growth operates under 5 operating divisions, the first one of which is our cultivation facility, which I just discussed. But the next 4 are our operating divisions that are revenue generating, including Flora Lab with over 200 products and 60 licenses, Casa Whole Foods, our food and beverage division with over 6 licenses and over 28 products, Flora Beauty, our skincare division founded by Paulina Vega, and then our industrial hemp division called Hemp Textiles & Co. And then lastly, our strategic M&A, as I mentioned, is focused on targeting transactions that allow us to complete the supply chain. We don't intend to be a vertically integrated company. We want to make sure that we find the partners that will allow us to complete our infrastructure on a global scale, that allow us to complement our revenue line, and that allow us to complement as well as our distribution. And then lastly, that have a human capital that is attractive and will add synergies to our already existing and robust operating divisions. I'll turn it over to James to highlight a couple of examples of our M&A strategy. James.
Thank you, Luis. So first, I want to caveat, we have 3 main focuses here at Flora. 1, increase geographical distribution. 2, increase the product portfolio that not only includes products in cannabis, but really products that actually allow us to penetrate traditional distribution channels, whether that's pharmacy, grocery, or convenience. I'm going to walk through quickly kind of a few of the deals that we have and touch on one of the most recent ones as well, Vessel. But maybe let me start with Hoshi first. This is an important one to us. On the tenet of having, geographical distribution, the Hoshi team, who's ex-Fire and Flower and Metrum, with a strong background in navigating the complex environment of cannabis, have secured 2 licenses and are building EU GMP facilities in Malta and Portugal, 2 of the most friendly regions of the European market, where we'll be able to backdoor Colombian flower as well as our extracts and isolates through both of these facilities. It's important to us for 2 reasons. 1, we have looked back historically at a lot of the M&A transactions that were predecessors to us, 2016 through 18, were certainly filled with a lot of capital being deployed and largely misspent. It's not our interest to purchase and pay too much for companies just to end up having to run their facilities. Instead, deals like this show that we can make modest investments, yet still have a good amount of control over how those organizations are run, and using our synergistic low-cost flower as well as our product portfolio to both become a supplier as well as a customer for a group like Hoshi, who we believe will be a predominant force in the European market. Secondly, HiMat. For those who don't know, HiMat is a pre-roll company with a proprietary technology to make cigarette-style pre-rolls with both hemp and blended tobacco in the Swiss market. What's important for us here is not only do they have established revenue line of 7.6 million historically, and that's in Swiss francs specifically, they also have established themselves in 2,500 traditional stores across Switzerland. These are your convenience and grocery stores. These are very sticky and difficult markets to get into, whereas most cannabis companies in North America operate under a very strict retail regime. This is a company who's able to allow us into anywhere you would buy a Coca-Cola or a pack of cigarettes. And that's important for us as we look at across our portfolio. We have the ability to vend in a very robust product portfolio that we'll discuss further, and hence why this type of transaction is important for us and shows us a path to building synergies. I'll also touch, it's not on this slide, but obviously the recent acquisition of Vessel. Vessel is a premium luxury hardware company in the vape market. They make vape pens for distillates as well as dry herb vapes. At the end of the day, this is a luxury premium brand and built by a team who has probably more e-commerce skill sets than most of the cannabis companies do combined. So we're very excited to have them as part of the team. Again, we are purchasing an established stream of revenue and vending in a team who's able to advance our e-commerce interests and push the rest of our brands across the world from a direct-to-consumer market. I'll also touch quickly on Kalea and then pass it back to Luis to discuss more on Tropy and then actually ask one of the questions that's already in the queue. Kalea is an interesting brand. Kalea is actually an established brand here in Canada, where I'm from. They've largely penetrated the majority of grocery stores, including Loblaws, Walmart, and London Drugs. And largely, they're a pain cream company who has one of the highest retention rates amongst all pain creams across Canada. It's interesting in Canada because for those who don't know the regulations, it's next to impossible to move CBD products down from Canada into the U.S. However, as a Colombian operator who's already moving CBD into the U.S., and we already send products to about 48 states currently, we have the ability to not only bring their product to Colombia and touch over 2,500 distribution points in our network already, but we also have the ability to move a CBD product that's manufactured in Colombia and push it back into the U.S., which a number of groups have failed to realize and do so far. I'll push it over to Luis to discuss the Tropy deal and how that's impactful and is a little bit different on our distribution side.
Yes, but before I do that, and I would like to answer some of the questions that are already in the queue. I believe that's appropriate. So there's a question about the weather. I imagine that's the weather in Colombia. It's an exceptional geography. We're located 1,500 meters above sea level. It's a seasonless environment on our farm, which means you have a consistent 12.5 hour cycles, 365 days a year. Consistent winds of 3 miles per hour, which are incredibly good to reduce the incidence of pathogens. And the soil is highly nutrient rich, which allows for high-level cannabis cultivation. Most people know at this point that Colombia is one of the largest producers of cut flowers in the world. It's actually the second exporter of cut flowers in the world. In fact, 70% of all flowers that come into the United States come from Colombia. Cannabis, being a specialty cut flower, is bound to be grown in one of the best geographies out of Colombia. The second question is, what are some of the value catalysts for the company for the rest of 2021 going into 2022? And I think I partly answered the question with the Tropy deal. Our foundational strategies was to ensure that we not only grow exceptional quality cannabis, that we also develop a portfolio of products across the industries in which cannabis is poised to disrupt. This has been strategic for us. There's barriers of entry in some of these CPG categories are lower, which allow us to expand our distribution at a far. We're only in the wholesale cannabis space.
Sorry, we're losing you there, Luis. You may want to back up and repeat that, or I can take over. Maybe I'll just touch on what Luis was saying, as it seems he's running into some connection difficulties. Overall, Tropy is an important deal for us because it shows our ability to penetrate very, very sticky distribution channels. Tropy is one of the largest distributors of food across Colombia with over 130,000 distribution points. Our product that we're actually sending through is actually a canned tuna product, if you believe it or not. We've added hemp seed oil. But as the question asked earlier, what is our potential to drive more value catalysts? It's a perfect example in the sense that this is only one product that we're able to drive material revenues from. In a single contract in July, we generated $1.1 million and are already trying to achieve approximately $2 million per month in sales from this single category product. Our belief is that similar to Kalea and Trophy and some of our other deals, we are just establishing these distribution channels right now, and our ability to bring our portfolio and add more products and continue to innovate will only secure us with both our customers from a distribution standpoint, like convenience and grocery, but also the end consumer who continues to look for innovative products across the CBD and eventually THC channels. Luis, do we have you back? All right. Well, maybe I'll just take over and continue. And Luis, please interrupt me if you're able to jump back on. Moving forward, I just want to walk through our brand portfolio very quickly for those on the line. Firstly, Flora Lab. As Luis mentioned before, this is our INVIMA facility. We have over 63 OTC products, 2,500 distribution points across Latin America. This is a merger across 3 different organizations, and really as a GMP INVIMA facility is one of the most impressive facilities you'd find in Latin America, let alone Canada or the U.S. We're manufacturing a great deal of products, whether it's dietary supplements, phytotherapeutics, as well, of course, some of the pain and beauty products that I will show you going forward. The next division we have here is Casa Whole Foods. Casa Whole Foods and our brand ambassador, Laura Landano, who's one of the most popular Latin American actresses in Latin America, with a great following, as well as certainly a very impressive female entrepreneur. Casa Whole Foods makes a large range of products, from juices to butters to chocolates to snacks, and we continue to innovate and see multiple product categories that we're able to disrupt, all coming out of Latin America and being actually sold in very impressive channels, including Tostado, for those of you who don't know, is very similar to the Starbucks model that you'd find in North America. Next, we have Flora Beauty. Flora Beauty is the brainchild of Paulina Vega. Paulina Vega is Miss Universe and Miss Colombia, and is a strong Latin American brand ambassador for many products, including Adidas. We've developed 2 lines out of this category: My Naturals, which is for the mass market, and All, which is our prestige market. Currently, we're selling these products across the world. We're now penetrating over 10 different countries, including 48 states in the U.S. Beauty is a very interesting category for us because not only does it have extremely high margins, it is an area of the CBD market which has largely been lacking in regards to true brand creation. And given that we have penetration in stores like Falabella, which is the Macy's of Latin America, we're very confident that moving into major department stores in the U.S. is coming quite quickly. Next, we have our hemp textiles business, which is largely driven by Stardog. I would recommend anybody who's on this call to check out Stardog Loungewear. The clothing is absolutely fantastic. Not only does hemp textile fabric get softer as you wash it, it's antimicrobial. It's certainly better for the environment, and for those who are eco-conscious, fashion and waste has become a very large issue that the world is slowly recognizing. We have both retail stores as well as a direct-to-consumer business that continues to grow very impressively, and we're excited to continue to add to this line and bring this product around the world. Maybe I'll take a brief stop and answer one question here. So there's a question coming in asking what our company's Moat is. I think if you look at the majority of companies in Colombia, and certainly some of the country or cannabis companies across North America, what I just showed on the brand side is really our Moat. Having an understanding of the consumer and building brands that aren't built just on being a cliche CBD or THC product is inherently more difficult, but important to actually winning the shelf and ensuring that you're building a proper distribution channel and relaying those products to the consumer. Obviously, having low-cost cultivation, which I'll touch on next, is certainly bonus points for us. Given that we are 6 cents per gram cultivator, our ability to then extract it on our premises in the future will only allow us to lead the category in regards to isolates and distillates that eventually will move back into Flora Lab, which will then eventually move into our brand, giving us superior margins under a vertically integrated model. Though that is not a requirement for us. Obviously, as the world changes, there are certain markets who are protectionist and will not allow for the import of THC or CBD products. But as a brand company, our ability to penetrate markets and remain on the shelf will always be a moat that is very difficult for others to penetrate, and simply relying on a wholesale market to drive all your business seems to be a strategy that the majority of cannabis players in the past have been unable to fulfill. Moving on quickly, and just as we're wrapping up here, I'll walk through quickly, what makes Colombian cannabis cultivation so great. We have posted a number of pictures on LinkedIn, so if anyone is following us, feel free to check that out. Our Colombian cultivation sits on top of a mountain. It gets 365 days of 12-hour plus sunlight. The winds are 3 miles an hour, which is extremely important for pathogens and allowing the plants to root more properly. We use an organic, nutrient-rich soil. We are not using pesticides or any other herbicides to actually make sure that our plants are healthy and happy. On top of that, our low-cost infrastructure allows us to have certainly a cutting edge above a lot of the rest. At $10 per acre monthly, we're paying significantly less than the majority of greenhouses or indoors would be in North America. We have zero cost on water, and utilities are less than $150 per month. At the same time, it's very evident that our labor in Colombia is significantly more superior than that around the world. It allows us to not only bring extremely talented and well-educated groups who are very strong in agronomy, but we're able to do so and make sure that we have the right teams taking care of our plants and not cutting any corners due to lack of cash to come through. So just as a quick profile on kind of where we are from an acreage standpoint, we've already launched 3 successful plots. We continue to expand. We have 30 varieties of non-psychoactive cannabis and 12 cultivars that have now been registered and are ready to start growing. We're achieving over 125 grams per plant now, and we find this very conservative at this time, as well as our overall production cost of 6 cents per gram. We will be building an EU GMP certified facility right next to our grow. It'll allow us not only to save costs on transportation of these products, but also ensure that we are adhering to the most strictest of EU GMP standards and regulations, and that's all done on our 247-acre plot of land. And then finally, I'm just going to touch really quickly before we wrap up here on our leadership team. We obviously went through a number of these already with Luis. Again, Bernie Wilson is a very established leader, not only in the cannabis space, but also being the vice chair of PricewaterhouseCoopers. He certainly has built a great team on the director leadership team. Juan Manuel Galen, as Luis mentioned before, is a 2-time senator and is the one who wrote the Colombian bill as well as the amendment, which is now obviously quite a benefit to us in regards to Colombia changing the rules and allowing THC to be exported, as well as CBD products to be used in things like edibles and beverages. And Javier Franco, our VP of Agriculture, spent over 20 years in agronomy and has been working with some of the most rare, unique flowers that come out of Colombia, and has since done a fantastic job about building our cultivation team with cannabis. Just touching on the capital structure, we have 42 million shares outstanding. Obviously, with the price action in Flora stock, we've been able to secure a number of warrants, and we'll be speaking later today on our call about exactly how that's transferred into cash from the company. It's provided a very stable cash balance and allow us to execute a very methodical and strategic M&A plan, though we are always very mindful of cash, and it is not of interest to us to outspend ourselves and put us into a situation that we've seen previous companies done in the past. We're very much looking forward to announcing our early earnings later today, and I look forward to any other questions to come in. I'll try to answer them in the last few minutes. So one question came in. Oh, sorry,
James, can you hear me okay?
Yes, I can now. Thank you.
Okay. There's a question on the Q&A about pending new laws that could benefit the company. The biggest change that we can share with our investors today are the changes in the cannabis law in Colombia. 3 weeks ago, President Duque signed a new decree into law that will allow for Colombian growers to export dry flower. As most of you know, over 50% of the revenues generated by the cannabis industry come from the dry flower segment. This will significantly open up revenue streams for Flora Growth and position it as a leader in the global cannabis marketplace. There are other significant changes in the law, but that is the most meaningful one that will dramatically impact our outcome in the near future. Are there any more questions from the audience? Okay, I think with that, we want to, James and I want to thank you for the time that you have given us today. As most of you know, probably today we'll have our earnings update at 4:30 p.m. We look forward to having you join that call and provide an update on revenues and guidance for the company. And you can always reach out to James and I. We'll be happy to provide you with more insight into our organization. We appreciate the time.
Thank you, everyone.